Welcome back, my friends. The news today is that Bitcoin ETFs have begun trading on U.S. exchanges. Investors and financial advisors will be watching closely to see not only how the Bitcoin ETFs perform, but also how well they track the price of Bitcoin and the trading volume of the funds. The Grayscale Bitcoin Trust, GBTC, and the iShares Bitcoin Trust, IBET, both saw tens millions of shares traded on Thursday. For cryptocurrency enthusiasts, this is a long-awaited day. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to Buy Me a Coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. First of all, for those of you unfamiliar with the terminology, an ETF, or exchange-traded fund, is a type of pooled investment security that operates much like a mutual fund. Typically, ETFs will track a particular index sector, commodity, or other assets. But unlike mutual funds, ETFs can be purchased or sold on a stock exchange the same way that a regular stock can. An ETF can be structured to track anything from the price of an individual commodity to a large and diverse collection of securities. ETFs can even be structured to track specific investment strategies. ETFs are a popular choice for diversification because they hold multiple underlying assets, rather than only one like a stock does. Because there are multiple assets within an ETF, they can be a popular choice for diversification. ETFs can thus contain many types of investments, including stocks, commodities, bonds, or a mixture of investment types. ETFs are traded on an exchange just like stocks are, and their share prices fluctuate throughout the trading day as the shares are bought and sold on the market. This is unlike mutual funds, which are not traded on an exchange, and which trade only once per day after the markets close. Additionally, ETFs tend to be more cost-effective and more liquid compared to mutual funds. Well, today the United States Securities and Exchange Commission gave the green light for ETFs based on Bitcoin to begin trading. Bitcoin exchange-traded funds saw big swings on their first day of trading on Thursday, mirroring a volatile day for crypto prices more broadly. The Grayscale Bitcoin Trust, GBTC, closed up 0.5%, well off its highs of the day, while the iShares Bitcoin Trust, IBET, fell more than 4% after initially rising in morning trading. Both funds saw tens millions of shares traded on Thursday. Those two were among the first of 11 funds that traded on Thursday after the Securities and Exchange Commission approved rule changes for its exchanges on Wednesday. The group combined for billions of dollars worth of trading volume in the first day. The Grayscale Fund is the biggest of the group, as it was converted from an over-the-counter trust that already had more than $28 billion in assets. The Hashdex Fund is currently a Bitcoin futures product, and while a rule change to list the fund as a spot Bitcoin product was approved, the fund's registration statement to convert the fund is still under review with the SEC. The moves for the funds came as Bitcoin saw volatile trading. The digital currency briefly hit the $49,000 mark Thursday morning before falling back below $47,000, for a gain of about 1% according to Coinmetrics. Bitcoin trades around the clock, so the first-day moves for the funds could be affected by the exact timing of their launch. Even given the heavy trading volumes and swings in Bitcoin, there appeared to be no major problems with the ETFs in their first day. Trading today went very well, very orderly, said Rachel Aguirre, the U.S. head of iShares product. ETFs are an investment vehicle where investors buy shares that represent a claim on the fund's underlying assets. Some of the most popular ETFs are equity index funds, though other funds in the category track bonds, derivatives, products, and commodities such as gold. Financial advisors and institutional investors often use ETFs because of their liquidity and tax advantages compared to mutual funds. Asset managers are betting that Bitcoin ETFs will bring new investors to crypto. This is actually what ETFs were made for, to take difficult, complex things and make it simple and compliant to trade. This will mainstream the asset class, WisdomTree CEO Jonathan Steinberg said. This will allow a less technology-sophisticated investor to buy Bitcoin in a way that they are very comfortable with, Steinberg added. Investors and financial advisors will be watching closely to see not only how the Bitcoin ETFs perform, but also how well they track the price of Bitcoin. Wide gaps between the price of a fund and the price of the underlying Bitcoin that lasts for multiple days could be a sign of thin trading or structural issues with an ETF and scare off potential buyers. Even if the fund is temporarily outperforming spot Bitcoin, trading volume will also be a key metric for investors, as funds with more trading are seen as more efficient though first-day trading volumes are not always indicative of a fund's future success. We really wanted to see some day one volume, but we also understand that there's a lot of platforms and gatekeepers and advisors and investors who kind of want to let this breathe a little bit and make sure the fund's doing what it's supposed to. David Mann, head of ETF product and capital markets for Franklin Templeton, told the Wall Street Journal, the Franklin Bitcoin ETF, EZBC, saw more than 2 million shares change hands on Thursday. The success of the funds could also be affected by different price points. Several fund issuers cut their proposed fees just below launch, and many are offering temporary waivers that cut their management fee to 0% in the short run. The U.S. Securities and Exchange Commission (SEC) decision to approve the rule changes to allow the creation of Bitcoin exchange-traded funds, ETFs in the U.S. has been viewed as a watershed moment for Bitcoin, which has been gaining mainstream acceptance in recent years. This move is expected to give regular investors access to the controversial and volatile cryptocurrency. However, Bitcoin ETFs have been a topic of controversy for a while. One of the main concerns is that Bitcoin is a highly volatile asset, and the value of Bitcoin can fluctuate significantly in a short period of time. This volatility can make it difficult for investors to predict the value of their investments, and it can also make it difficult for ETF providers to accurately track the value of Bitcoin 3. Another concern is that Bitcoin is not regulated by any central authority, which makes it difficult to monitor and control. This lack of regulation has led to concerns about fraud, money laundering, and other illegal activities. Despite these concerns, the approval of Bitcoin ETFs is expected to make Bitcoin more mainstream and accessible to a wider range of investors. It remains to be seen how the market will react to the new ETFs, but many experts believe that they will be a positive development for the cryptocurrency industry. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors, including any type of specialty, nurses, and that includes all grades of nurses, lawyers, regardless of area of legal focus, teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.